of questions. And so my expectation is if we're going to do something in that area, it's going to be putting a toe in the water and not just throwing ourselves over Niagara Falls on it. So I can imagine a situation where we would try that in a particular circumstance. But for us, we're just going to do the work and understand it as many other central banks are doing now.
In our case, we use the scenario analysis in our risk management section as a kind of representing the tail risk. But I have to read the ECB report. But if we have to move that section into the more forecasting section for public communication, I wonder whether it's going to be easy to get some consensus, which scenario we have to do it among our probably members in the monetary policy meeting. So because that scenario and the underlying assumption may be much harder to communicate and to agree among the members. And also, it's specific to us, but how I can differentiate the previous approach of risk management section to the forecasting that I have to think over what we have to do.
So I think two things I would add, and it's very much in the same spirit as colleagues. One, we introduced two scenarios in the May round and in the May report. For me, they were very useful. They were either on either side. They weren't symmetric, by the way, but they were on either side. For me, they were very useful in terms of my decision-making because they helped me to answer the question, given the uncertainty, if I'm wrong in my judgment, how wrong am I going to be? Do I think I'm going to be? And what would be the consequences of that? And what would we then have to do to deal with them? And is it manageable? And that was helpful. And then I think the question, coming back to what Jay was saying in terms of public communication, I mean, this is the big step, I think, and it is challenging. I'll tell you why, because I say this quite a lot. We make a lot of conditional statements. You may have detected this in all the many interviews you do. And I'm not making a personal comment now, Francine, but a lot of those conditional comments get immediately translated as unconditional comments. It's sort of life.
We're quite careful, but
no, it's not personal. This is the general point. And so the reason I say this is that if we, and that's about the central case, by the way. So if we introduce scenarios, that's a message to us that you're going to have to do this very carefully in that world, because to get the point across about there is always a range, there's always uncertainty, there is always risk. How you calibrate those and how you, as Jay was saying, how you communicate those publicly is critical, but pretty challenging, frankly, in that environment.
Governor Ueda?
Yes, we also carry out many simulation exercises about scenarios, but we have not, as far as published them. We do discuss in our quarterly reports qualitatively what risks we have in mind. Mm-hmm. On top of that, I would say, in a very rough way, we are carrying out something like a risk management approach to monetary policy making, which is probably a bit similar to what Christine was talking about yesterday. I can't come up with a good example, but risk scenarios, thinkings about tail risks, sometimes do affect our monetary policy making.
Can I ask you all about the dollar, everyone's favorite subject? So when you tune out noise, right, of the past few months, what has really changed about the dollar? Governor Rhee, are we really seeing some sort of paradigm shift in the status as a reserve currency that means historians will look back on 2025 as some sort of pivotal year?
I don't think so, especially in case of Korea. Our Korean won has appreciated significantly in the last 2 months, but I think it's mostly due to the very unique situation that we had. We had a very unexpected, unnecessary martial law declaration in last December, and after that, this political risk, together with the slowdown of our economy, really make Korean won depreciate much more than our fundamentals explain. So, in some sense, the appreciation that we have observed in the last 2 months, in some sense, normalization of our currencies. And as for the kind of long-term shift of the dollar sentiment, we have discussions, but looks like people are talking about it. But at this moment, they keep the dollar assets while they're increasing the hedge ratios. So at this moment, I think the lion's share of the impact, BIS report show this one is impact is mostly moving from the unhedged to the hedged positions. So we have to see what will happen in the future.
Yeah, Governor Bailey?
Well, I'd say two things. First of all, I think that it's important to bear in mind what the sort of the definition of a reserve currency is and how it's evolved over many years. So I like John Ray. I don't see there being a sort of a major shift at the moment. Not least because in this day and age, the definition of a reserve currency has as much to do with the supply of safe assets into the market that can be used for all the purposes of sort of collateral and security that they are, as much as it is about a sort of pure exchange rate. So I think we're a long way off that change happening. The second thing is going back to something Christine was saying earlier. I mean, when we look at financial conditions, which we do, of course, but I do think particularly, I always believe this, but I think it's even more relevant at the moment to unpack a financial conditions index. And the reason I say that is because we've seen a breakdown in the correlations of the components of a financial conditions index. So you look at sort of bond yields, you look at exchange rates, you look at equity risk premium, for instance. Those correlations are not the ones that we've tended to see established over time. So you have to look at it much more carefully. There are stories, to my mind, about each of the components of that. So when I look at the exchange rate, I look at it very much on that basis. I don't think it's sensible to sort of pack it all up as we normally would and say it's all behaving normally, because the correlations are not actually.
Governor Ueda, there's also many colleagues at central banks, I guess, around the world are building up gold reserves. Is that the only real alternative to the dollar?
I think it's up to a certain extent what areas like Europe or China would do in terms of improving the efficiency or convenience of their currencies, like the kinds of things we were discussing this morning, capital markets integration, and these things will change the degree to which the role of the dollar may decline in the future.
Women Lagarde?
I think, I don't know if 2025 will be a pivotal year. I would tend to think that, yes, it might very well be. But for a major change to occur will take a lot of time and will require a lot of effort. And I completely agree with the points made by Andrew about the dichotomy that we're seeing at the moment. And that might be an indication of the fact that investors are looking at options. This is what investors are saying. They ask questions, they seek alternatives, and whether that translates into a general lack of confidence that will be further fueled by more uncertainty, more unpredictability, a bit of a jump in the unknown on several fronts, not just monetary policy, not just even the economics, but beyond that, in terms of security at large, for instance, I think remains to be seen. It's not going to happen just like that overnight. It never did historically. There is no reason it should now, but there is clearly something that has been broken, and whether it is fixable or whether it is going to continue to be broken, I think the jury is out on that front.
And Chair Powell, how do you think we'll look back on 2025?
So you're asking me how we're going to look back on 2025?
Yeah, how will historians look back on this year? Is it pivotal?
It's clearly an important year. There's a lot going on, with trade, and I think I'm hopeful that we'll look back on it as a year where we successfully challenged some significant economic changes, and our job is to make sure that is the case.
You get attacked by the president a lot on a personal basis. Does it make your job harder?
I'm very focused on just doing my job. There are things the things that matter are using our tools to achieve the goals that Congress has given us: maximum employment, price stability, financial stability, and that's what we focus on, 100%.
Madame Lagarde, if you were in the same position as Chair Powell, would you do anything differently?
I think I speak for myself, but I speak for all colleagues on the panel. I think we would do exactly the same thing as our colleague Jay Powell does, the same thing. Yeah. Right?
Yes.
Governor Bailey, is the rest of the world decoupling from America but pulling tighter elsewhere? How do you see fragmentation happening?
Well, fragmentation, were it to happen, in my view, is bad for activity in the world economy. No question about that. I mean, if we reduce the openness of the world economy, that will be bad for activity in the world economy. Now, I temper that in one respect, because obviously we have learnt a lot about the robustness of supply chains over the last 5 years, and it is, of course, appropriate that there will be adjustments to that. But if we see a breakdown of the openness of the world economy sort of beyond that sort of resilience that we do see as needed, then that's bad for activity, it's bad for the world economy, and that I'm afraid is something that I think we need to be very clear. I've said a number of times, look, there are reasons why this is happening. It's not right to just go around saying, this is all wrong, there are no reasons why this is happening. What I think is very important is that we get back to a governance of the world economy where we can address these issues in the appropriate multilateral fora, and get to the question of what lies behind these issues, what's at the root of these issues, what exactly are the issues, and what do we do about them. And I can't emphasize this enough, that I think it's an obligation for all of us who are obviously very heavily involved in the governance of the world economy. We've all got very big responsibilities to say that is our duty, to get back and to the process of saying, what's caused this and what do we do about it, and what do we deduce are the underlying issues and how do we address them? Because otherwise, say fragmenting the world economy is a bad outcome.
But what kind of fragmentation would it be? Is it, again, are you fearful that the world is splintering irrevocably, or is there a pool that's just moving?
Well, I think if it was a breakdown of trade in the world economy, obviously exactly how that would manifest itself would remain to be seen. But it would be running against a long period now where we've been building the resilience of trade in the world economy. We've been building openness. But as I said, I want to sort of temper that by saying, look, there are issues. I don't think we should say there are no issues. This is all made up. There are issues, and we need to address what they are and work them out. But we need to do that in the context of a commitment to a robust, open world economy.
Governor Rhee, as the only governor here representing a non-reserve currency country, how concerned are you about fragmentation of the global financial system and the risk at the end of the day that the US may be less willing to provide dollar liquidity in a future financial shock?
I'm at the ECB Forum on central banking in Sintra, Portugal. Here in scorching hot temperatures, top central bankers and academics are discussing how policy